guys, welcome back to my channel. Today I'm going to show you how to read a candlestick, which is important for every trader to learn. A few months ago I didn't even know how to read a candlestick, but now I do, and I've decided to share with you my journey of my understanding of candlestick patterns. You might be thinking, oh, why am I going to learn from you? I'm not a professional trader. I'm a beginner like yourself, and I fact checked everything, and I also have a trader husband. So yeah, and do what you will with that information, and let's get right into it. Candlesticks. Why do traders still use these weird chart patterns today? And let's get into it. Okay, so I'm going to section my videos into three. Where did candlesticks come from? Why candlesticks? And understanding candlesticks. I know, bear with me guys, I know it's boring. I was bored in the beginning. But in order for you guys to be a profitable trader, you don't need to understand the context of trading and understand the basics before actually trading. Okay, and before one of you in the comments say, oh, why do I need to do the history? It's important to know the history because you not essentially need to know what you guys are trading and where it came from. That's like buying an Amazon product, right? You're buying it and not reading the reviews. You're just buying it blindly. Same context of trading. Someone asks you, oh, let's say you're an amateur now, right? And you don't even know where a candlestick, and they ask you, oh, so where do candlesticks come from? You just know like the fluff of it, but you actually don't know where it came from. So yeah, same context. If you guys want to skip the history part, you lot can, but I advise you not to. Okay, so let's get into it. Where did candlestick patterns come from? Candlesticks came from Japan in the 1700s. It was invented by a rice trader called Minahisa Homer. I think I butchered that name, but that's my guy over here. Homer tracked rice prices using early candlestick charts. He basically essentially created what we use today, candlestick patterns. So, why did he decide to use candlesticks? Homer realized markets moved on emotions, not just supply and demand, but fear, greed, and hope. He used them to track rice prices, predict market psychology, understand supply, demand, and human emotions, basically what I just said earlier. So candlesticks matter today because it gives you a visual insight of what's going on in the market. They're used to help map out support and resistance, which we'll get into later on in the videos that I create. But they help map out support and resistance, which is why you should understand what a candlestick is. It helps you spot reversal and trends, understand market psychology, and they're also used by pros, the banks, the hedge funds. So why wouldn't you guys use it, right? Modern trading. The same method Homer invented is still used in stocks, crypto, and forex. The markets have changed, but the idea hasn't. Candlesticks are basically century-old psychology in action. Okay, now we're getting a bit to the juicy part. So, candle body, what does it tell us? Okay, you lot are looking at this, okay. It looks very confusing, right? But don't worry, I've got you. This line over here is called the upper wick, and the line in the bottom is called the lower wick. Some people call it shadow, some people call it wick. It's up to you. I prefer to call it a wick because that's how I got taught. A wick essentially shows the high and lows of the battle between buyers and sellers. And then the middle part is the body, which is this over there, which I just drew for you guys. Okay guys, I've given you a live example. So what is this, and what is this, and what is this? I give you 3 seconds. Okay, so remember, this is the upper wick, this is the body, and this is the lower wick. They're all the same, even this small one. There's no defined textbook definition. Some upper wicks can be long, some upper wick can be small, and sometimes there's not even an upper wick or a lower wick in a candlestick. Okay, so what essentially is a candlestick? A candlestick is a visual tool that shows the open, the high, the lows, and the close of the price within a specific time period. Okay, so remember what we just said earlier, candlesticks have 4 points: the highs, the lows, the open, and the close, right? So this over here is a green candle. It has a long body. So the upper wick, as we mentioned, is called the high price. Let's say we're looking on the daily time frame, right? This is the highest price of the day. Now, the lower body of the candlestick is called the opening price. So it's the opening price of the day. The lower wick over here is called the lowest price of the day. And then the upper body is called the closing price of the day. This green candle, it has a strong body. What is it called? It's called a bull candle. A bull candle essentially means buyers are in control. Because it's a big candle, you could say, you would call this a strong momentum. Whereas if it was a small candle, like, let me go back, like this one, or like this one over here, you would say that it's a small momentum. So this essentially, what we just said is a bull candle, and this over here is a red candle, which is the opposite. So as you may know, this will be called a bear candle. So sellers are in control. Think of it this way: bear, red, right? They're scary. People want to sell. Bull, we can say they're not really lovey-dovey, but let's just, in context sake, bull, lovey-dovey, green. People want to buy. They love it so much. Characteristics of the red candlesticks is kind of similar, but not that similar. So it's similar in terms of the upper wick and the lower wick. So this is the highest price of the day. The lower wick is the lowest price of the day. Now, some people get confused with this. So it's the opposite of the green candle. So the lower body is actually the closing price of the day, and the upper body is the opening price of the day. So in the green one, the lower body was the opening price. In the red one, the lower body is the closing price. I know it's confusing at first. I was so confused. But what helped me though is, let me show you. Okay, so you know how we said bull candle buying are in control? So they're trying to push the price upwards, right? In an upwards trend. So of course it wants to close higher and it doesn't want to close lower. It wants to close higher because it wants to go up, buying pressure, right? Now, for the bull candle, selling pressure, so it wants to go down, right? Remember, red, scary. So it wants to close lower because it wants to go down. Simple, right? So let me say that again. Bull candle, it wants to go up, buying pressure. So the closing price, of course, wants to be higher. Bear candle, sellers are in control, so it wants to go down. So of course, it makes sense that the closing price wants to be down, wants to go down, right? Just a little summary, what we just said. A bull candle is green, a bear candle is red. Let's draw that again. I'm saying it twice so you can try going into your head just a bit. Okay, so a bull candle, the close is above the open. Remember what we just said earlier? And then the bear candle, which is red, the close is below the open. Okay. Fairly easy, right? And a bit boring, but it's interesting. Okay, so shooting star, hammer, what is that? So I'm gonna get into what a shooting star and a hammer is properly in my next video, but just for context. So a hammer looks like this. Think of it of Thor's hammer, and a shooting star is just the opposite. There we go. Shooting star, hammer, what are they? They're not just funny names, they're century-old patterns. They were invented by Homer. Remember my guy we spoke about earlier? He basically used them to predict human emotions in markets. So when you see shooting stars or when you see these candlestick patterns that you'll get to learn later on in this series, is that they're not random. It's history and psychology and strategy all in one. So candlesticks are not random. It actually tells a story. So yeah. Thank you for watching, guys. In the next videos, I'll be talking about how to read candlesticks. It's going to get even more juicy. I know, guys, like I mentioned, it's boring. This is boring stuff, but you don't need to know the beginning stuff before you actually jumping into trading. If you just go into trading without understanding anything, you lot will lose your money. Okay, so yeah, can a housewife out-trade a full-time trader? Let's find out. And don't forget to like and hit that subscribe button if you want to see more. Ciao, guys.